Hey everyone, and welcome back for another deep dive. Today we are going deep into the world of real estate funding.
All right.
You know, those impressive developments we see going up all around us.
Mm-hmm.
Well, we're going to be looking at the financial muscle that makes it all happen.
Yeah, it's a whole hidden world, right?
Exactly.
Most people just see the finished product, that shiny new building.
Right.
But behind it, there is this huge web of financing.
It's definitely not just about heading to the bank and getting a loan, right?
Nope, not at all.
So our source material today is coming from Express Rupya Capital Advisors.
Okay.
And they really break down all the different pieces of the puzzle. They mention things like construction finance, inventory funding, lease rental discounting.
Yeah, those are the big ones.
Could you break down what all of that means for the average developer?
Sure. So like construction finance, that's the most straightforward one, right? It's
Yeah.
all the money you need to actually build.
Okay.
Think labor, building materials, permits.
So it's every cost that piles up before you even see a wall going up.
Exactly.
Okay, that makes sense. What about inventory funding, though? Is that like keeping track of all the supplies or something?
So imagine a developer has just finished like a whole block of apartments.
Right.
Inventory funding helps bridge the gap between finishing construction and actually selling those apartments.
I see.
It's all about managing that cash flow until the sales start coming in.
Okay, like a financial safety net.
Yeah, you can think of it like that.
What about lease rental discounting? Now, is that something that renters should be aware of, or?
It can be, yeah. It's like this, a developer can actually use the future rent they expect to collect and use that as collateral to get funding today.
That's interesting.
Yeah, it's a way to use potential income to get money now,
Wow.
but it can affect how much rent they charge later on.
So it's like a ripple effect.
Yeah, definitely.
So far, we've just been talking about funding the actual building, but it seems like there's a whole lot more to it than just that. Express Rupya also talks about funding for land purchase, TDR, and statutory approval payments. I mean, these all sound like huge expenses.
Oh, they definitely can be. Getting the land is often the first big hurdle.
Yeah, especially in a city like Mumbai.
Exactly. Land scarcity drives prices way up.
And then there's TDR.
Yeah, transferable development rights.
I'm not familiar with that one.
So imagine you have a historic building that can't be demolished.
Okay.
The owner can actually sell their unused development potential to another developer.
Oh, wow.
And that developer can use it to build taller or denser buildings somewhere else.
So it's a way to encourage preservation, but still allow growth in other areas.
Yeah, that's the idea.
And then, of course, all those statutory approvals.
Don't forget those. Permits, paperwork.
And you need all of that before you can even break ground.
Exactly.
That's got to be a nightmare sometime.
Oh, it definitely can be. Those approvals take forever and they cost a lot of money.
And any delays can really throw off the whole project.
Absolutely.
Speaking of delays, Express Rupya mentions solutions for delayed installed projects.
Right.
That sounds like a real lifeline for developers who run into trouble.
Yeah, it is. Those delays happen more often than you might think.
Really?
It could be something like an unexpected archaeological find
Oh, wow.
or permits getting held up by bureaucracy.
Oh.
And that all means rising costs, lost revenue. It can be a disaster.
Yeah, that makes sense.
So companies like Express Rupya, they can offer bridge financing
Okay.
or help restructure loans to get things moving again.
So they really help get those projects back on track.
Exactly.
It's really amazing how many things can impact a project. But what about developers who don't have a perfect financial history?
Ah,
Express Rupya also mentions customized funding for OTS, bad civil scores, and defaults with banks.
right.
What's going on there?
That's a very interesting part of their business. So OTS means one-time settlement.
Okay.
Basically, it's a way to renegotiate debt. And CIBIL, that's India's credit scoring system.
Right.
Offering funding to developers who have had financial challenges in the past. That's really interesting.
Yeah, why would they do that?
It could be because more and more developers are smaller or newer,
Okay,
and they haven't had the time to build up a really strong credit score.
that makes sense.
Or maybe traditional lenders are getting more cautious, and that's creating space for these alternative financing options.
So we've gone from construction finance all the way to OTS.
We've covered a lot.
Real estate funding is clearly very complex.
Oh, yeah.
So for our listeners out there who are seeing new developments popping up all over, what does all this mean for them?
So the next time you see a new building,
Yeah.
think about that complex financial dance that made it a reality,
Okay.
but also think about how all these different funding mechanisms
Mhm.
actually shape our cities.
How so?
Well, do certain types of funding mean we get more luxury condos
Yeah.
and not enough affordable housing? Are they financing risky projects that maybe shouldn't be built? These are things to think about when you look at how our cities are changing.
That's something I'll definitely be thinking about. Thank you for joining us on this deep dive into the world of real estate funding.
It's been a pleasure.
And we'll see you all next time
See you then.
for another knowledge adventure.